Hello and welcome to another edition of the Startup Operator Roundup. This is Roundup 103? 102. All right, you might not see a familiar face on screen today. Gunjan Zaha is busy partying / traveling in Indonesia and / working as well, as he would like us to believe. We have instead, drumroll please, we have a producer, Thiru, subbing for him today. So Thiru, how does it feel like to be on your first Roundup?
Feels good, but I'm feeling a little nervous.
Little nervous. All right. Hopefully, the monsters don't come and eat you up. Don't worry, it'll be fine. Right. So, yeah, if you're new to the Roundup, we curate news and insights from the Indian startup ecosystem. We talk about the week that was, fundraises, industrial policy, who said what, why you should care about things, and so on and so forth. And this has been a super busy week, right? We're going to talk about a few things, right, Thiru? So, what are we going to talk about?
So the first is Silicon Valley Bank's sudden collapse. Yellow AI is latest to join layoff spree by startups. GoMechanic has been sold to CarTrade. PM Modi says startups have the potential to create a huge market for handicrafts. Government of India has published a presentation on new Digital India Act that gives insights on what it's going to be about. And Mintify and Zetwork have raised funds. And Koo is the first company in the world to integrate ChatGPT into its services.
All right. So last week we put out an episode with Shruti of Apna Club. If you haven't already checked it out, do check it out. It's about supply chain financing, and we'll talk about some of that in this week's fundraise section as well with Mintify. Right. Why don't you start us off, Thiru, with SVB? What's happening?
Well, Roshan, SVB became the largest US bank to fail since the 2008 financial crisis. The collapse was caused due to a sudden bank run by its depositors in a panic triggered by several factors. California banking regulators closed the bank and appointed the Federal Deposit Insurance Corporation as receiver for later disposition of its assets. On Monday, HSBC announced they bought SVB's London unit of the bank for £1 only.
Wow, fireside sale.
Yeah. Also, Treasury Secretary Janet Yellen approved actions enabling the FDIC to complete its resolution of SVB in a manner that fully protects all depositors. The depositors will have access to all of their money starting on Monday, March 13th.
Well, that should come as some relief to founders, for sure. It's been a nervous few days in the Indian startup ecosystem, particularly for B2B SaaS startups. Silicon Valley Bank is extremely startup friendly. It is an iconic institution in California, right? And a lot of startups bank with them, and of all the things that you can think of going wrong, whoever thinks about, your deposits not being safe, right? That's the one thing that you at least can make an assumption on, right? So this whole thing started because the amount of deposits that SVB had really ballooned over the last 3 years, right? Given the low interest rates and given the fundraising hype, we had a huge amount of money come into the bank. So they had something like $60 billion of assets around 2019, 2020, pre-pandemic. And then that, rose up to something like $180 or $190 billion. Right. And remember that deposits are liabilities for banks, right? So which means that they have to put that money to work to earn an interest. And usually that is what banks are careful about, right? Credit risk, which is that, am I lending it to the right kind of people? Am I recovering my loans? Am I earning enough interest and so on, right? But they weren't able to sort of loan this money out quickly enough, right? And the deposits rose. And they had this weird situation where, the funding dried up and they had to cover their liquidity. So in that period of time, 2022, they had bought in a lot of these long-term mortgage-backed securities, right? They had bought these 10-year MBSs at something like 1.5% interest rate. Now, we've covered this as well over the last couple of quarters, 2 or 3 quarters. The Fed has been steadily increasing rates, by 50 basis points, 75 basis points, enough that it's the highest rate increase in 10 or 15 years, right? And soon to be 40 years, actually. Yeah. Although, I don't know if we'll see another rate hike. And what this does is that, the market value of all of the MBSs are way less than, what SVB bought it for, right? And in order for them to cover some of their liquidity. See, again, it's not a solvency crisis, it's a liquidity crisis at this point of time, right? At the point that I'm talking about. And in order for them to cover their liquidity, in order for them to have some cash, they sold some of their assets at a loss, right? They sold it for something like a $1.8 billion loss, which is significant. Now, this unfortunately was not worded in a way that would inspire confidence, right? And a bunch of investors caught on to this, right? I mean, SVB sold this in Jan, I think, right? And Peter Thiel, Union Square Ventures, a bunch of these folks caught on to it. They advised their portfolio companies to withdraw their money and so on. And this kind of triggered a bank run. And really, there aren't too many banks in the world that can, resist or survive a bank run, right? I mean, if you suddenly have, 10x the number of people who are withdrawing on a daily basis show up at your door, it's really, really hard, right? Unless you're one of those really, really large banks. So being a regional bank, even though it is large enough, right? I mean, it's the top 20 largest bank in the US at that time, right? I mean, they weren't able to resist this, and I mean, the FDIC had to step in. The bank was shut down, but fortunately, better sense has prevailed, right? Treasury Secretary Janet Yellen has announced that the depositors will be made whole. There's this whole debate about, hey, I mean, is this a bailout, not a bailout? Who's paying for this? All of that stuff, which is very complex. I mean, in my opinion, somebody is paying for it, right? I mean, if not the taxpayers, as the Treasury Secretary claims, somebody else is paying for it for sure. But it basically reinforces trust in the banking system, at least, right? That, hey, I mean, if you deposit money, I mean, at least that is good. Right? I mean, otherwise, I mean, I don't know who would really keep their money in regional banks otherwise, and what's to prevent other bank runs from happening. As we speak today, March 13, Monday, First Republic is down, I think, 60 or 70%. There are another couple of banks which are down 50, 60%. And this is the stock value, basically. Right? So, yeah, it's a period of a lot of chaos, but as they say, the US always does the right thing once it's extinguished all the other options, right? Feel like, I mean, the right thing was done in this case, because one thing to note also is, these are not the typical tech bro types that some of the narrative talks about, right? I mean, these are small businesses. These are people who had a few $1 million, and these were people who could not make their payroll without this money, right? So all in all, I think we've managed to dodge somewhat of a terrible situation. So the funds will be accessible right now, even beyond the 250K. And I think the FDIC will sort of liquidate the assets, maybe wait for one of the bigger banks, I don't know, JP Morgan, Citibank, or Bank of America, or someone else to really buy them out. As you heard, HSBC has bought the London unit. Right? This could be a good opportunity, for one of the larger banks as well.
Or maybe Elon Musk.
Or maybe Elon Musk, who seems to want to buy everything, right?
Yeah.
Right. Yeah, I mean, crazy. But yeah, I mean, one of the larger banks may very well end up buying SVB, right? And they get access to all of the VCs and the startups and whatnot. Yeah, interesting times. I mean, I was just, talking to a colleague of mine that, imagine 5 or 10 years down the line, the kind of stories that you'll have to say, right? That you will be able to tell that I survived a pandemic, right? Where the whole world shut down, right? And I survived a bank run where our money was stuck, right? Really surreal times. And again, my heart goes out to all the founders who've been impacted. Stay strong, and hopefully, one thing heartening as well is that the community is really coming together, and hopefully, we will see some kind of resolution on this front.
Right. Yeah. Moving on. Conversational AI startup Yellow AI has joined the growing list of startups doing layoffs, having fired 15% of its workforce over the past 6 months.
Wow.
The SaaS startup said it announced the layoffs via a company-wide communication in an email from the CEO to the employees. On a broader note, the startup ecosystem as a whole has laid off nearly 23,000 employees across 78 startups as the funding winter continues.
Well, it's always sad to hear about layoffs and downsizing, but it's something that has to be done in order for them to stay afloat. Yellow AI, I think, had raised $100 million or something in 2021, I want to say.
Yeah.
And with all of these growth ambitions, it's easy to sort of get carried away and really expand very quickly. But again, what the funding winter, what the market turning has re-emphasized is that you really have to be cautiously optimistic, right? Which is that you have to, again, lay emphasis on business fundamentals. But all of these things, again, right? I mean, it's easy for us to talk about this in the studio, our brand new studio. But it's harder on ground, practically. So yeah, my sympathies with the team, especially the folks who've been laid off. But hopefully, they get absorbed in other companies. But SaaS, man, I mean, SaaS is such a, like, I don't know why SaaS companies have not been able to plan this better, right? I mean, I can understand a consumer internet startup that hasn't really figured out its monetization, or other kinds of startups, right? But B2B SaaS, I mean, it can be as predictable as possible, right?
Right, yeah.
And it's something where you can scale in a very calibrated way. But again, props to the folks in the arena, the folks who are like fighting it out there. Right, and hopefully things turn around and some of the optimism returns.
Okay, so on a similar note, almost 2 months after GoMechanic's co-founder Amit Bhasin publicly admitted to financial misreporting, the after-sales service startup has reportedly found a buyer in auto marketplace CarTrade. CarTrade has valued GoMechanic at a little over 30 million, and there's a steep decline from the post-money valuation of $285 million it achieved in June 2021. The reports state that beside CarTrade, another investment firm is also involved in the deal.
Well, I suppose it's reasonable consolidation, right? Both of them work in the same space. And you're going to see a lot more of this, because there are a lot of startups, what I call orphan startups, right? Where the founders have kind of checked out. And this is just par for the course. I mean, after the kind of, funding boom that we had in 21, and the market turning in 22, you are going to see a bunch of these startups that will be kind of up for sale, right? Where the founders have kind of sort of backed out, or they've given up, or no longer in a position to scale the startup. And it's a good opportunity for consolidation, I should say, right? If people have been prudent about their finances, I think this is a great time to shop, right? I mean, you've seen SaaS companies, for example. Public SaaS company is some of the best SaaS companies are trading at 7x or 8x multiple. So if you paid 30x or 40x for a SaaS company in 2021, now should be like a discount sale, right?
Right.
So yeah, I mean, I definitely see some of the larger startups scoop some of these folks up, right? Yeah.
Right. Well, on a more optimistic note, Prime Minister Narendra Modi on Saturday said that Indian startups can play a big role in creating a huge market for homegrown handicraft products. He said that these products can also get assistance from startups in a better technology, design, packaging, and financing. This was while he was addressing a webinar on PM Vikas Yojana. He also said that this scheme will further strengthen partnership between Indian private sector and local artisans.
This is it's a long-standing dream of any technology entrepreneur in India, right? Which is, how can we take Indian arts and handicrafts, which are so rich and so diverse, to the world? And in many ways, the world has been flattened twice, given COVID and everything that's happened post that. So yeah, I mean, the Vikas Yojana, I think, affects about 20 lakh people. 20 lakh candidates have been skilled based on that program. And looking at, how this whole D2C phenomena has shaped up, right? I certainly have bought, stuff, whether it is shoes or whether it is chocolates, from places like Mysore, Coimbatore, some place in Jaipur, and so on, right? We have this kind of plug-and-play infrastructure to enable these small businesses, to really sell their wares online. So whether it is technology, whether it is delivery, whether it is marketing, there is so much of support in an infrastructure, right? And this is what, Sajid Pai of Bloom was saying as well on the weekend, which is that startups in India tend to punch way above their weight, right?
Right.
And so, yeah, I mean, this is a very interesting, exciting kind of a space for us to look at. I know a couple of folks who are working in this space, and props to them,
Right. So on a more optimistic note,
Still more optimistic
note. The government of India has shared a presentation on a new Digital India Act aimed at preventing market power concentration and gatekeeping by big tech companies. And this will replace the Information Technology Act of 2022. This act seeks to revamp India's current digital regulatory landscape, which has been far outdated. So the Digital India Act lays out plans for India's digital goals by 2026, a global standard for cyber laws, present challenges in the cyberspace beyond the Act of IT 2000.
Yeah, I think one particular aspect of the Digital India presentation that I saw really appealed to me, the fact that, the government is calling for an open internet and talks about fair trade, and so on, right? We have spoken plenty of times on this podcast on how big tech can sometimes have very unfair practices, right? And it gives a sort of a stepmotherly treatment to Indian entrepreneurs, whether it is, their very opaque algorithms on the Play Store, App Stores, or the fact that there aren't particularly good redressal mechanisms in order for developers to kind of reach out and reach resolutions and so on. So this is amazing. This regulation will hopefully put them in place and also do what's right for Indian entrepreneurs and developers.
All right, so in some very interesting news, Koo is the first company to integrate ChatGPT into its microblogging platform. So this will allow users to access a variety of use cases, including sourcing top news of the day or requesting a post on a particular theme. And this feature is available to verified profiles for now, and it will be expanded to all users in the near future.
I think this is a very interesting development. I've seen a few tweets generated by ChatGPT, and I couldn't tell the generated tweet from the actual tweets by people, right? It's able to study the tone, expression, articulation based on the history of all the tweets that the account has put out and generate that. Fantastic stuff, and Koo has done exceedingly well, right? I mean, incidentally, they're very big in Brazil. So Koo apparently translates to ass in Portuguese.
Okay.
And and this became somewhat of a viral thing in Brazil, where one of the journalists there picked it up and started talking about it. So, when you say follow my Koo or whatever, it's like follow my ass, right? I mean, it's weird how these things work, especially in consumer internet, for sure, right? So very interesting development, and props to the Koo team. Hopefully, it's been a long pending thing for us to have Aprame on the podcast sometime. Yeah, I mean, hopefully it materializes in the next couple of months.
Yeah. So Roshan, with Elon taking over Twitter and Koo integrating ChatGPT, how do you think it will play out between the two companies?
See, I always feel the smaller platform is the more nimble platform, right? Koo can launch 100 features in the next, 4-5 months in comparison with Twitter, right? But although Twitter has been going at breakneck speed post Elon Musk's takeover, right? I mean, this is what you get when you have a CTO/product guy as the CEO, right? They've certainly come a long way since. But, I think the demographics are very different, right? Koo is more language focused. It's more focused on emerging economies, Brazil, Nigeria, Southeast Asia, and so on. Whereas Twitter clearly has a bent towards the Western world. And the market is big enough that, there can be 2 or 3 platforms, I think. Yeah.
All right, so moving on to some fundraising news for the week.
Okay.
Around 178 million has been raised across 18 deals over the past 8 days. Fintech startup Mintify has raised 110 million in a Series D round.
Wow.
Content to commerce unicorn GoodGlam Group has increased its stake to 90% in the mom's company.
Mm-hmm.
Zetwork has raised $12 million in debt from Edelweiss Group. And ahead of IPL, fantasy cricket startup Fantasy Akhada has raised $11 million.
Wow. Interesting bunch of companies for sure. A few things I want to pick up on. Obviously, IPL season is coming up, and we spoke about Ashneer Grover's latest startup as well, right? CrickPay. So it's going to heat up, man, with these fantasy gaming startups and so on. Zetwork raising a bridge round. Well, they have been bleeding money for the last year or so. So I think hopefully, this helps them tide things over. Mintify is an interesting startup, right? I mean, we've had supply chain financing startups earlier. We've had Rupify and maybe a couple of others I'm forgetting. But yeah, I mean, this is a very interesting thing, right? I mean, they have, all kinds of consumer brands, distributors working with them. And they simplify this whole process of getting credit on demand. Right, and we've spoken earlier about how India is so famously credit starved, and so these folks are doing a fine job helping connect businesses with the liquidity they need. Right, so very interesting. And the mom's company, we had Malika Sadani sometime back on the podcast. Do check out that episode. It talks about how to build a D2C brand. Very, very interesting content. Yeah, they've increased their stake in the mom's company by 90%, which is, again, significant, I should say, right? I think the GoodGlam Group has a bunch of these folks that they're kind of operating as a portfolio. So, interesting bunch of fundraisers, I should say.
All right, so let's talk about what's coming up for this week.
We have a very interesting conversation lined up for you. So I spoke to Sajid Pai and Amal Vats of Bloom Ventures, and the startup ecosystem has been buzzing about the Indus Valley Annual Report 2023 that came out, maybe a couple of weeks back. Right, so we got to dig deeper with Sajid and Amal on the various aspects of the report. If you haven't checked it out, do check it out. We'll link to it in the description. Some fascinating insights based on data. And I really felt happy talking to Sajid and Amal about the various aspects of the report. As you guys already know, I am an India optimist forever. Right, and there's indeed plenty to be optimistic about in the report if you're an Indian. So yeah, we're going to put that out hopefully by Thursday or Friday.
Yeah.
All right, so with that, we come to the end of the Startup Operator Roundup. Let us know how we did. If there's something that we should have covered, we will definitely line that up for next week. Also, keep your suggestions coming in, and don't forget to follow, subscribe, all of the good stuff. You know what to do. We've said it before, right? And show some love to Thiru as well in the comments. We'll see you next week on another episode of the Startup Operator Roundup. Share, like, enjoy. See you. Bye.
Bye bye.